The most powerful economic weapon in history was fired at Russia. It missed. March 2022. President Biden declared the ruble would be reduced to rubble. He predicted Russia's economy would be cut in half. The IMF forecast a catastrophic 8.5% collapse. Western economists predicted destruction up to 16%. Reality check. GDP fell just 1.2%. By 2024, Russia grew 4.3%, outpacing Germany, the UK, and most of Europe. Unemployment didn't spike. It fell to 2.1%, an all-time low. So how did the most comprehensive sanctions regime in history fail? The target? The world's 11th largest economy. More importantly, what does this mean for your money? Let's connect abstract geopolitics to your wallet. The West froze approximately $300 billion of Russian reserves, half of Russia's entire war chest, and the world noticed. The European energy crisis hit home hard. Household energy costs as a share of income nearly tripled, from 8% to 23%. Germany's economy contracted 2 consecutive years, 2023 and 2024, the only G7 economy to shrink. But here's what happened while everyone was watching the headlines. Russia-China trade shifted almost entirely to yuan and rubles, from just 2% before 2022 to over 99% today. Global dollar reserves have declined from 71% in 2000 to just 57% now, the steepest decline since Bretton Woods collapsed. To understand how we got here and where this is heading, we need to go back to the moment everything changed. February 2022. This didn't start in February 2022. The economic war began 8 years earlier. March 2014. Obama signs Executive Order 13660, the first sanctions after Russia annexed Crimea. Travel bans, asset freezes on officials. The world thought this would be enough. It wasn't. What the West didn't see, Russia was quietly preparing. They built SPFS, the System for Transfer of Financial Messages, their own domestic SWIFT alternative. They started shifting reserves away from dollars. And on February 4, 2022, exactly 20 days before the invasion, Xi Jinping and Vladimir Putin signed what they called a no-limits partnership. 20 days. That wasn't coincidence. That was an insurance policy. February 24, 2022. Russia invades Ukraine. Within hours, the West launches coordinated sanctions. 2 days later, the nuclear option, swift removal for major Russian banks. Here's what the experts missed. Russia wasn't as vulnerable as it appeared. Pre-war reserves, $643 billion, the 5th largest in the world. Central Bank Governor Elvira Nabiullina had been quietly preparing for years. She shifted reserves away from dollars, from 40% down to just 11%. She tripled gold holdings to 2,335 tons. Commodity export revenues hit a record $580 billion. The current account surplus was a massive $227 billion, and trade was already diversifying. To China, to India, to Turkey. Now here's where it gets interesting. The confidence was absolute. EU Commission President Ursula von der Leyen. Russia's economy is on the path to oblivion. Treasury Secretary Janet Yellen. The Russian economy will be devastated. The Economist predicted a 15% GDP collapse. The IMF forecast 6 to 9% contraction. Biden declared the economy would be cut in half. One administration official even said, and I quote, "Sanctions proofing is a myth." Reality? Only 1.2 to 2.1% decline. Let that sink in. The most sanctioned country on earth, over 16,000 restrictions, and the economy barely flinched. Within weeks, the sanctions seemed to be working. The ruble crashed 45%. Russian stocks were halted. Even Nabulina seemed to signal defeat. She wore all black with no brooch on February 28th. Analysts interpreted it as mourning the economy. She reportedly tried to resign. Putin refused. But then, something unexpected happened. By June 2022, the ruble recovered to 50 to 60 per dollar, actually stronger than pre-war levels. Nabulina cut rates from 20% back to 7.5% by September, below pre-invasion levels. The Russian stock market reopened and recovered most losses within months. The IMF's mid-2022 forecast of negative 8.5% revised to actual negative 1.2%, a massive forecast miss that nobody saw coming. How did Russia survive? The answer involves the world's largest shadow fleet, billions of dollars in discounted oil, and two countries that refuse to play along with the West's plan. Before the war, India bought roughly 50,000 barrels per day from Russia, just 1% of Russian exports. By 2024, that number exploded to 1.7 million barrels daily. Do the math. A 3,400% increase. India became Russia's #1 oil buyer, surpassing even China by July 2024. Together, India and China now absorb 85% of Russian crude exports. The discount game tells the story. In late 2022, Russia was selling Urals crude at $33 to $40 below Brent prices, a 40% discount. Desperate sellers, eager buyers. By late 2024, that discount narrowed to just $5 to $9 per barrel as supply chains normalized. But when fresh sanctions hit in November 2025, the discount blew back out to $19 to $24. India saved an estimated $10 to $25 billion on discounted oil. China saved another $16 billion. India's External Affairs Minister Jaishankar put it with characteristic bluntness. Why should India pay higher prices just to make you happy? Life is about respecting other people's interests, not about having everything your way. And when criticized for buying Russian oil, his response, "I am waiting for the thank you for softening global oil prices." To move all this oil, Russia built something unprecedented. A shadow fleet of nearly 1,000 tankers. These vessels now represent 17 to 19% of the entire global tanker market. The fleet has more than tripled since early 2022. How does it work? Tankers get registered under flags like Gabon, Cameroon, or Palau. They carry insurance from unknown or fraudulent providers. 2/3 have insurers that can't even be identified. They turn off their tracking transponders. They spoof their locations. They conduct ship-to-ship transfers in international waters to obscure the oil's origin. Through the Danish Straits alone, oil worth €103 billion passed between January 2023 and mid-2024. That's an average of nearly 3 shadow vessels per day through one choke point. Annual revenue from this shadow operation? $87 to $100 billion. The West has scrambled to respond. As of December 2025, the West has sanctioned 621 tankers. Biden's administration sanctioned 183 in its final days. The UK hit 135 more in July 2025. But the fleet keeps growing. Nabulina's playbook was aggressive and unconventional. She doubled interest rates overnight to 20%. She closed the stock market for weeks. She banned non-residents from selling securities. She released 900 billion rubles in emergency buffers. And critically, she forced exporters to convert 80% of their foreign currency earnings into rubles. The ruble crashed to 135 per dollar in March 2022. By summer, it recovered to 50 to 60, actually stronger than before the invasion. But here's the kicker. Adaptation has limits. Russia set up parallel import schemes to procure Western goods through third countries, Turkey, Kazakhstan, the UAE. By 2025, those volumes dropped nearly 50%. Inflation consistently runs over double the central bank's 4% target. Perhaps the most consequential shift happened in currency markets. Russia-China trade in local currencies went from just 2% before 2022 to over 99% today. The yuan became the most traded currency on the Moscow exchange in 2023, exceeding the dollar with a 42% share. Yuan-denominated loans in Russia tripled to $46 billion. Russia jumped from nowhere to the fourth largest yuan trading center globally. The share of unfriendly currencies, dollars and euros, in Russian trade collapsed from 87% to just 18%. If you're still with me, you now understand the sanctions story better than most policymakers did in 2022. Hey, quick question for the comments. If you were running India's foreign policy, would you prioritize Western alignment or cheap energy for your citizens? Let me know below. But here's where it gets really interesting, because everything I just told you is only half the story. Now, before you think this is some pro-Russia take, hold on, because the costs are staggering, and Putin has built himself a trap he may never escape. Brain drain. 650,000 to 800,000 Russians have emigrated and stayed abroad since February 2022. 43% of them work in tech. The aviation crisis is accelerating. 58 aircraft were decommissioned in 2024. The fleet is projected to shrink by more than half by 2026. Demographic collapse. Q1 2025 saw the lowest quarterly births in 225 years of Russian records. And military spending has hit 7.2% of GDP, the highest since the Cold War, crowding out everything else. Russia's economy is running on borrowed time and borrowed steroids. Let me explain the trap Putin has built for himself. Russia's 2024 military expenditure hit $149 billion, a 38% jump from 2023 and double what they spent in 2015. Let that number sink in. 7.1% of GDP. Nearly 1 in 5 government dollars goes to the war machine. For 2025, planned military spending rises to 7.2% of GDP. Meanwhile, education gets just 0.7% of GDP. Healthcare gets 0.87%. Interest rates sit at 16 to 21% to fight inflation, strangling civilian investment. Non-defense sectors have been contracting since February 2025. 4 consecutive months of decline. Here's the paradox. GDP growth is driven by war spending, not productive investment. When war spending slows, the economy has nothing underneath it. As Carnegie Politica put it in December 2024, Russia's economy has operated like a marathoner on fiscal steroids, and now those steroids are wearing off. The semiconductor crisis is existential. Russia now pays an 80% premium for chips compared to pre-war prices. 88% of chips come from China versus a diversified supply before. Roughly 50% of Russian semiconductor parts fail due to defects. And domestically, Russia can only produce 130 nanometer chips. The cutting edge globally is 3 nanometers. Let that sink in. That's a 20-year technology gap. Aviation is collapsing. The fleet went from 1,500 to 1,800 Western aircraft in early 2022 to roughly 700 operating today. Russia officially legalized cannibalization, stripping grounded planes for parts. Half the newest Airbus fleet sits grounded with no spare parts. Aviation safety incidents more than doubled, from 37 in 2022 to 81 in 2023. About €1 billion in aircraft parts has been smuggled in through the UAE, Gabon, and China. The automotive sector tells a similar story. Production collapsed 97% in May 2022. Just 3,700 cars versus 108,000 before invasion. By 2024, production remained 50% below pre-war levels. Chinese brands now dominate 60% of new car sales, up from 9% in 2021. The average Russian car is now 15 and a half years old. Russia's population stands at 146 million, down from a 149 million peak in 1994. The fertility rate hit 1.41 in 2024, the lowest in 17 years, far below the 2.1 replacement rate. Q1 2025 births, roughly 294,000, marked the lowest quarterly figure in 225 years of records. War deaths have taken their toll. 219,000 Russians killed, according to Mediazona, BBC, and Meduza estimates through August 2025. Emigration has claimed another 800,000, mostly young, educated, urban professionals. Labor shortages now affect 70% of companies. 2.2 million workers needed. The National Wealth Fund tells the Fiscal story. It held $113.5 billion before the war. Now it's down to $36 to $48 billion, a two-thirds decline. Economists warn it could be exhausted by 2026 to 2027. Oil revenues dropped 34% year-over-year in July 2025. The 2026 to 2028 period faces combined deficits of $126 billion, to be covered entirely by borrowing that will nearly double national debt. By the way, here's a detail most analysts miss. Remember that unemployment number, 2.1%, an all-time low? That's not a sign of economic health. It's a sign of crisis. War mobilization, mass emigration, and demographic collapse have created such severe labor shortages that anyone with a pulse can get a job. Low unemployment is masking a hollowed-out workforce. So what about the easy solutions? Let's run through them. Russia can just keep spending. The National Wealth Fund is nearly depleted. 21% interest rates make borrowing crippling. War spending crowds out productive investment. China will save Russia. Chinese banks increasingly refuse Russian transactions. 98% have stopped accepting payments. China won't jeopardize access to US and EU financial systems. Trade contracted 10% in 2025 from secondary sanctions pressure. Russia can make its own technology. The MC-21 domestic aircraft saw production costs double after switching to domestic engines. Chip production is stuck 20-plus years behind. Historical parallels are sobering. North Korea has faced sanctions for 70-plus years, the world's longest. Result? 10.1 million people food insecure, 200,000 children malnourished. But the regime never collapsed. It adapted to permanent poverty. The nuclear program continued and expanded. The harsh reality is, sanctions have a success rate of less than 10% in forcing major policy changes. The trap mechanism. The West can't easily reverse course without appearing weak. Frozen assets create permanent distrust. Alternative systems now have momentum. Russia can't return to Western markets without ending the war. Both sides are locked in a mutually destructive stalemate. So here's the real question. After 3 years, who is actually winning? The answer isn't what either side wants to hear. Here's the paradox in one line. Sanctions failed to collapse Russia, but succeeded in accelerating exactly what America fears most, the end of dollar dominance. The numbers tell the story. Global dollar reserves down from 71% to 57%. BRICS now counts 10 full members representing roughly 50% of world population and over 40% of global GDP. India's external affairs minister openly defies Western pressure because, as he put it, if it works to my advantage, I would like to keep that going. Meanwhile, Russia's GDP is slowing sharply, just 0.6 to 0.9% growth in 2025, down from 4.3% in 2024. The 2026 forecast, 0.8 to 0.9%. Stagnation is settling in. Now let's hear what the experts say. Mark Episcopos of the Quincy Institute put it bluntly in April 2024. Biden's prediction that the economy would be cut in half was catastrophically wrong. Alexandra Prokopenko of the Carnegie Russia-Eurasia Center explained, windfall from sky-high energy prices helped Russia weather the initial shock. Even U.S. Treasury Chief Sanctions economist Rachel Lingas acknowledged Russia is over 5% smaller than predicted, far less than initially forecast, and historical analysis found sanctions have a success rate of less than 10% in forcing major policy changes. Russia didn't defeat sanctions, it survived them by becoming permanently dependent on China, accepting technological decline, and converting to a war economy. The West didn't break Russia. It pushed Russia into China's orbit, demonstrated the dollar can be weaponized, encouraging diversification, and paid 212 billion euros to Russia for fossil fuels between February 2022 and early 2024, while imposing sanctions. Nobody won. Both sides are trapped. China? China wins without fighting, gained a resource colony and yuan internationalization. India? Strategic autonomy preserved, cheap oil, refused to pick sides. The Global South? Learning that sanctions are optional if you have leverage. The sanction paradox exists because economic warfare has the same problem as real warfare. There's no such thing as a clean, surgical strike. Every action has consequences that ripple outward, and sometimes backward. Pandora's box of finance has been opened. So what happens next? Let me show you the 3 most likely scenarios and which one I'd bet on. Scenario 1. Prolonged stalemate. This is where I'd put my money. Russia continues slow economic degradation, maybe 0.8 to 1.2% annual growth, while sanctions become the new normal. De-dollarization accelerates gradually. Neither side achieves its stated goals. We're looking at 5 to 10 more years of grinding attrition with no clear winner. Scenario 2. Sanctions escalation. The West lowers the oil cap further. The EU's new $47.60 cap is already in effect. Secondary sanctions hit Chinese and Indian banks. The potential Chinese banking pullback accelerates. Russia gets forced into deeper isolation, the Iran-North Korea model. The risk here? Desperation moves and global energy price spikes. Scenario 3. Negotiated de-escalation. A Trump administration seeks a deal with Putin. Partial sanctions relief in exchange for a ceasefire. Russia declares victory. Ukraine's future remains uncertain. De-dollarization pauses but doesn't reverse. The risk? Setting a precedent that aggression can pay off. The IMF projects Russian GDP growth of just 0.8% for 2026. The World Bank sees 0.9% for 2025, roughly 1% for 2026 to 2027. Long-term projections suggest about 1.2% growth through 2030. At current spending rates, Russia's financial reserves face exhaustion by 2026 to 2027, full depletion by 2030. So what does this mean for your money? If you're holding dollar assets, watch the de-dollarization metrics closely, not for panic, but for gradual portfolio rebalancing. If you're in Europe, energy prices are structurally higher for years. That's not changing. If you're investing globally, friendshoring and supply chain diversification are permanent trends now. Invest accordingly. For everyone, the era of frictionless global finance may be ending. Energy price volatility continues. Inflation risks from commodity disruptions remain. Consider portfolio diversification into gold and non-dollar assets, and keep watching BRICS currency developments. Are sanctions achieving their stated goals? What's the true cost of economic warfare? Is the dollar's dominance sustainable? And who really benefits from a fragmented global economy? The sanction paradox isn't really about Russia. It's about the limits of economic power in a multipolar world. For 30 years, the West assumed the dollar and SWIFT were unchallengeable weapons. Russia just proved they're not, and the world is taking notes. And if you haven't seen our deep dive into Ireland's corporate tax illusion, another economy that looks strong on paper but hides uncomfortable truths, check it out. Links on screen. Now I want to hear from you. Drop your prediction in the comments. Will sanctions eventually break Russia's economy, or has the West permanently damaged dollar dominance? Let me know below.